You might have some money accumulated somewhere, or you're planning to save up some money for a project or for any goal. It could be you planning to buy a house, land, or even just to further your education. But again, you don't know the best place where you can save and invest your money and grow your money so that you reach to your goal. So in today's video, I've come up with the investment guideline for beginners. If maybe you've been thinking of how to start investing, maybe it's your first time, you don't know where to begin, you don't know the best avenues to save and invest, this is the video for you. And please stick around to the end so that you get to know how you can start investing and places that you can consider if you're just beginning. So if you're new, my name is Sheila, and welcome to Sheila's World, and feel free to join my community so that we grow together. So the first thing that you need to start asking yourself about when it comes to investment is what happens to your money over time. So as you know, over time your money loses value, and the reason we invest is for us to grow our money. So how do we add value to the money? Let's say if you have 1,000 shillings and you put it under your mattress for the rest of the year, every year, let's say even for 5 years. So in 5 years time, your money will have lost value over that period, and it's because of the fact that there's inflation, the rising of prices of commodities and services. So if you don't put your money where it's earning some interest or it's growing, it means your money will be losing value over time depending on where you are keeping it. So once you know what happens to money over time, then you're able to choose the right place where you can save and invest. So with saving in the bank, let's say a fixed saving account, that's one of the ways that everyone knows. I'm sure everyone has at least a bank account, but when you want to grow your money, is a saving account the best place to put your money? I don't think so. It's because under savings accounts, you don't get any interest unless you fix your money, and even if you fix your money, let's say in a bank, a fixed account, the most interest that you can get is less than 2%. In our country, the inflation rate currently is above 5%. So if you're getting anything where you're putting your money, you're getting anything below 5%, it means that thing is losing value. Some of you will think of, let's say, real estate, which is also one of the best ways. There's also shares. Shares is another way where you can save and invest. So, but when it comes to real estate is one of the way where you can add value to your money. But again, it needs some capital. So if you happen to have some good amount of capital, let's say you can access a mortgage or a bank loan, real estate can be a good place to invest for long term. If you are just a beginner, you are starting your investment journey, definitely you can't be thinking of real estate. So the best way, we have something called shares. Shares is one of the ways where you can save as a beginner, but I would not advise a beginner to go for individual stocks. So individual stocks means you go directly and buy stocks from different companies. There is high risk to that, since all your money is just in one organization. So in case of the collapsing of that company, it means all your investment is gone. So the best place where you can invest as a beginner is go for mutual funds or through a fund manager. You don't need to be an expert in investing. You don't need to know which shares they're investing in, but you are sure you are dealing with experts, since majority of the fund managers, they do all the work for you. And like if you go directly to individual stocks, it will mean you have to deal with that broker directly. You still don't know how much, you don't understand stock, so you can be conned as well if you're not careful. So the best way is just to go through the fund managers, and that's where things like equity funds, I'm sure majority of you have heard of money markets a lot. That's one of the ways of investing, but we have other investing in stocks through the equity funds. So equity funds is just basically investing in stock through a fund manager. This is where you can start with any amount, and that's why I said if you are a beginner investor, you don't need to think of having a lot of money for you to start. Nowadays, even you can open an account with 500 shillings, but focus on topping up, since whenever you're doing any investment, you should invest with a goal. Let's say I want to buy a car. That should be my goal. So how much does the car that I intend to buy cost? So if it costs, let's say 2 million, 3 million, my focus is to raise 3 million, let's say in 3 or 5 years time. So once I open an account, I'll be topping up that amount, since I know I don't have the lump sum, but you can be doing every month top ups, 5,000, 10,000. Nowadays you can top up any amount as long as you focus on your goal, since if you don't save with a goal, along the way you lose the focus and you'll stop the journey. So always save and invest with a goal in mind. Don't just invest without any focus, like just because people are investing. And that's why you need to be setting up goals beginning of the year, end of the year, like what are you going to achieve from this month to the end of the year, in 5 years time, in 10 years time. Do you want to buy a house? Do you want to buy land? Do you want to build? Do you want to have a wedding? All those are goals that you can save towards. And that's why, so stocks, as a beginner, I'd advise you go through the mutual funds or index funds, assuming that you don't have any experience in investing. So at that point, you are sure that your money is safe, since you're investing as a group through experts who are fund managers. And also the risk is spread in that since the mutual funds, they don't invest just in one individual stock. They diversify automatically. Let's say 20% in this company, 20, another 30. So risk is diversified, and that's why now your money is safe. So if one company goes under, you're sure the other company is still there. So your money is safe. But if you have capital and maybe you just want to start, you've been working for some time but you've never invested in stocks again, if you have the knowledge, you can still go directly through the brokers. But for me, I don't go through brokers. I'd rather go directly for the long-term bonds. That's when I go through the government, the central bank, open a CDS account, and I invest in bonds. But for beginners, please, I'd just advise go directly through the fund manager. It's safer. You don't need to know so much. You just need to save your money and they'll do the rest for you. So that is the easy way. And also the fees charged through a fund, through the mutual funds, the fees are not very high. They are low fees. Majority charge around 2% management fee, and that is on interest and also the tax. So your money is safe. Another thing that I'd like to advise, if you are starting investing, think of time. So how do you buy? As I said, how you buy shares, if you can go through a broker or through the fund manager. But only go through a broker if you have some knowledge in buying shares. Then how to decide? I've said about don't go for individual stocks. If you are beginning, go through the mutual or index fund. Someone was asking if investing in stocks is risky. Yes, any investment comes with some percentage of risk, and when you're taking you are taking part in any investment, you should have an open mind, since you might lose, you might gain. And that's why when it comes to stocks, always think long term. Even if it's real estate, when you buy a house today, you can't expect to sell it next month at a profit. You have to give it time to add value. So when you're buying stocks, think long term. You should not be buying stocks when you're thinking short term. And that's why we have options of, if you're thinking long term, just be safe with the money markets accounts. But if you're thinking long term, if your goals are long term goals could be, let's say, your children's education in the future, your pension fund, things that you don't need now. You might need them, let's say, 10, 15 years, 20 years from now. Even owning a home. If I'm 25 years, and I want to own a home when I'm 35 or 40. So that's a long-term plan. You can actually plan, start saving at 25. By the time you're 40, you'll have reached your goal. Let's say if it's raising money for a house, or if it's land, whatever you want to do, that time you need to give it time. Risk can only come if you are thinking short term. So same way with the stocks. If you buy shares in any organization, let's say you bought, a good example is the first shares that I've ever invested in way back when I was starting working. There was this Safaricom IPO. I didn't understand what shares was then, but since everyone was going for it, I also went for it. But then what I learned from that time, because that's the time I was starting working and also learning about money since I was in the finance industry, I realized that majority of people don't understand investment. Since I remember that initial price, the initial offer came at 5 shillings per share. Everyone was happy, like, wow, this is a big company, we can afford. And minimum shares you are supposed to buy, I think 1,000 shares. No, 100. No, you're supposed to buy at least 1,000 shares minimum. So people went in, we bought. I was among the people who bought the shares. But then, after the closing of the IPO, that initial price offer, remember it started at 5 shillings, then it dropped to 3 shillings. Just the day after closing, there was a lot of panic all over. People were running, "We have lost my money." So the following day, everyone was going to sell their shares, you know. So if you don't understand how investment works, you'll panic and you'll rush to sell your shares at a loss. If you bought a share at 5 shillings and you sell it at 3, definitely you lose. So people who were patient enough, I was among the people who were patient, and I still enjoy my dividends to date. The one for Safaricom, people who are patient enough can tell you to this date, it's over 10 years now, I think, since that offer. The price dropped to 3 shillings, but then it stayed at 3 shillings for some time. So some of us, we just forgot about the money, like, let it stay there until when. I knew eventually it will rise, it will break even, then it will grow. So it took like 3 years for the money to get back to 5 shillings. Can you imagine the patience that you need when you're investing in stocks? So after that, after the 3, it came to 3 to 5 shillings. And then, in fact, if you are the best, if you are smart enough, when it dropped to 3 shillings, that's the time to pump in more money. You don't need to sell off. You pump in more money, since eventually it will go up. It has to come back to the initial price. Currently, over 10 years later, I think the Safaricom shares at 40, it ranges between 42 to 45 shillings. It never stayed at 3 shillings. It just stayed there for a while. So that's what I'm trying to say here is that when you're investing in stock, you just need time and patience. You don't need to be in a hurry. So make sure you have your emergency funds in place. You don't have any debt, so that you don't rush to sell the shares very fast. Then just make sure any other emergency and short-term needs are taken care of. That's the only way you can grow when it comes to investing in shares. So that is my short story when it comes to shares. And I was just trying to arrive to the fact that when you're thinking of stocks, think of long term, it's not short term. That's the only way you can grow. So how to start or when to start? Anyone can start, as long as you have money that you think you want to, or you have an intention of investing. It doesn't have an age. As long as you are above the legal age, you have an identity card, you can start as soon as possible. So as I said, if you're a beginner, I would advise just go for the mutual funds. And if you need more help, I can help you, since that's what I do. I have clients that I help when it comes to investment advice. So you can reach me on my Instagram. If you don't follow me on my Instagram, I can help you if you really don't know where to start. And also I have a Facebook page where I help people when it comes to investing. So you can start with any amount depending with the company. find out, do research, ask your friends, ask your financial advisor if you have one. They can guide you on how to start investing. And then how much money do you need to get started? As I said, it depends with you. If you have, you can decide to be putting aside monthly, you can decide to be sending weekly. So it just depends with your goal and how much you are willing. If your goal is to raise, let's say 500,000 by end of the year, you just need to break down every month how much you need to send there, and please commit so that the money can grow. The next, if you're going for individual stocks, that one you'll need to get a broker. We have in Kenya, we have different brokers. We have Dyer and Blair, we have there are several. Just Google Kenyan brokers and go ahead and start. And if you're looking into bonds, which still you can still invest in bonds through mutual funds. And that's why I said, if you're a beginner investor, don't stress yourself with knowing where to invest, which bonds to buy. Just get a good fund manager or a good company that does the investments, and a unit trust. That's a unit trust in short. Then just open an account with them and decide how much you'll be sending there. So as I said, if you really get stuck, let me know, I can assist you. So that's all I wanted to say today about beginner investing. For people who are just beginning to invest, they've never tried to invest in shares before or in stocks, and they don't know where to start. You can start with any amount and your money will grow. So I think that's what I have for today. So I'll see you again in my next video. Bye bye. We'll talk again next time. Please leave a comment and let me know what you think. See you. I'll talk to you later. Bye bye.